Welcome to another stage analysis video. It's Sunday the 22nd of June 2025. Lots to get through as always. Going to start this weekend low with a look at what's going on in the major indexes as we've moved into stage two for over the last 3 weeks in the S&P 500 and the Nasdaq 100, but we haven't seen follow through in the other indexes. And with the geopolitical events happening this weekend, we obviously could see it drop back below those levels and move back into the stage one base again, one potentially on as the futures open in a few hours time as I record this video. So it's looking like it from the weekend markets. I think there's only one, the IG, which is very thin, but it does seem like with that and Bitcoin dropping off 3 or 4% or so, it's looking likely that we'll drop below the level. So tomorrow's reactions and how the price closes will be crucial to whether we actually maintain the level or not. So I'll start off with the indexes. So looking at the S&P 500, the bottom of this chart here, we've got the combined percentages of stocks above their 50-day, 150 and 200-day moving averages. So it's a nice combined moving average breadth line, which currently sitting just over 48%. So still roughly just on what we consider a neutral environment here. I'll get more into depth in that later on in the video in the market breadth section for the members. But coming back to the S&P 500 chart at the top here, as I said, broke out above the stage 2 level 3 weeks ago and has been consolidating around that level for the last couple of weeks. So hasn't really moved very far. Had a few spikes higher. We come onto the daily chart here. You can see it's rolled up the 180R level here, which we consider where a short-term uptrend occurs. So when it's above that, it tends to be in a short-term uptrend. So it's the 180R level from its 21-day exponential moving average. So you get moves back into that, which is a bit more of a value zone. So at the moment, we've been this whole week with only one day, Tuesday, where it popped back above it again. But for the majority of the week, it was below that plus 180R level, but still holding it above the 21-day moving average. So in that value range and just above the stage 2 level. It obviously broke out, as I said, 3 weeks ago, started to move out. So we're right back testing there. But with as I said, the geopolitical news over the weekend, looking like the market's going to open 1 or 2% or so down. So if it's just over 1% or so down, it could open down in this kind of area here, which is below that stage 2 level. So there is a chance we could get a retest of the 200-day moving average in the S&P 500 if there is some follow through to the downside. But if we get a strong rebound, red to green day, start to come back through that stage 2 level, then potentially we could get some strong follow through back to the highs again as that starts to dissipate off. But at the moment, not making any predictions here. We're still in a short-term uptrend, so until we start to see the new price action coming in here and we start to drop below any key levels, obviously there's nothing particularly to worry about at the moment. We're just in a trading range still, but some near-term weakness, so some defensive action in the near term. So if we look at the Nasdaq 100, very similar to what we're seeing in the S&P 500, but doing better in terms of it's further above its 200-day moving average and its various the stage 2 level, etc. So again, 3 weeks into stage 2, very tight weekly closes for the last 3 weeks here. We've got 62% Nasdaq 100 stocks above their 200-day moving average still, so in a strong range at the moment. So if we look on the daily chart, again, that 180R level, which it's been above for the last few months now for the majority of the time. So it's pulled back underneath that again on Friday there. So only the second time it's closed back below it convincingly in the last month or so. So it has been running strong. So normal pullback towards its 21-day moving average and still above that stage 2 level at the moment. And obviously approaching the highs again with a 1% or 2% drop down here. We could see so 2% would take it back down below the minus 180R level. 1% drop or so would take it just below the stage 2 level. So we could get opens down into this range if we see that follow through in the futures. So But again, looking for potential spring type action, looking for a move back through, potentially start to see it move back towards the highs again. But if we do see this break, we start to see the negative 180R level start to be violated there, then we could start to see a potential move back towards the key moving averages, your 200-day moving average, 50-day moving average, etc. But at the moment, looking for that rebound, looking for a near-term spring and in the market currently, as we are in a short-term uptrend, and potentially we're in the early stages of stage 2. But as I said, we start to get closes back below the stage 2 level, it would drop us back into the stage 1 range, which was only a very brief stage 1 as we moved very strongly, very quickly into stage 2 after gapping up through that 200-day moving average and consolidating for only a few weeks. So would be normal for it to pull back through here, wouldn't be anything too serious, but if we did start to break some key levels, then it would start to be a bit more serious at that point. So at the moment, just see how this reacts again tomorrow. 47% above their short-term 20-day moving average in the Nasdaq 100 at the moment, whereas the Russell still in stage 4 minus at the moment. So it's been in 4 minus since it closed back above the 10-week moving average back here. So it has been improving with the Nasdaq and the S&P 500, but it did have a deeper move into stage 4. So you can see from its stage 4 breakdown level there, it dropped all the way down to over 20% from the stage 4 level, and from 30% off of the highs. So did go deeper into stage 4. So the rebound has got it back up towards that stage 4 level, which is now the stage 2 level has started to develop around this area, because it is that V bottom move. So a pullback through here would be normal action, but if it did start to drop back through some key levels, we could start to see it roll back over. It drops below the 10-week moving average again, it would be back into 4 again. So coming back, we've only got 30.83% of stocks above their 200-day moving average in the Russell, that's in the S&P 600. We don't have the Russell 2000 stats for that, but it gives a rough proxy of what's going on there. Look at the daily chart again. So this one has come back below its plus 180R level multiple times, so it has been weaker than the Nasdaq and the S&P 500. You can see it's been dipping below its 21-day moving average as well. So currently spent the entire week below the plus 180R level, but still above the 21-day moving average there. So if it starts breaking that, then a potential test of that 50-day moving average would be a logical place in the near term. But if we do see the opposite, we start to see a move back to the upside, start to close back above the 200-day moving average, start to clear that stage 2 level, which I think's we come back at the moment. Let me give you an exact QQQ, no, IWM. At the moment, what are we at? 216.91 at the moment if we come back through this. So just about 1% or so above the 200-day moving average at the moment, as the base with this has developed in the lower structure below the 200-day moving average. So the entire last quarter of price action has been below that 200-day moving average, where we saw S&P 500 and Nasdaq moving back through that and consolidating at higher levels. So their stage 2 levels developed at higher levels than we've seen with the Russell. So this remains the laggard, only 42.5% above their 20-day moving average at the moment as well in that. And then the VIX, so this would expect it to spike on Monday, would expect a high open. So if we get some kind of move up into this area as the volatility increases with the geopolitical events, so it will depend how it closes on the day. If we get a strong reversal, start to see it close back in the lower half, then that would be potentially a bullish, especially if we followed through back in the following days. But if we see an expansion, start seeing it going this way, then obviously full on defense at that mode, as we could get a much deeper spike. So looking for a quick spike up, drop off and start to come back down ideally would be the more bullish scenario, and then particularly getting back below its 200-day moving average. But as I said, if we start to clear these levels and start to convincingly get up into the 20s, then we could see a deeper spike as the political tensions rise. So as I said, no predictions, we'll just see how the market fares to start the week. So coming back through these, if we look at the ETF summary of the positions at the moment, S&P 500 and Nasdaq 100, both early stage 2. We've got the mid caps in stage 1 still. Russell 2004 minus at the moment, and the Dow is in stage 1. It did move above its stage 2 level briefly, but dipped back above it again in the same week there. That was 1 week ago, and then has rolled back off 2 weeks ago and has rolled back over. So this at the moment, it's got a long way to go to its stage 4 level again, so all the way down at 383 at the moment. So it's back into the developing stage 1 structure at the moment. So we're looking through this area, but sitting at the top of that range currently. Whereas from the sectors, we have seen multiple move into stage 2 recently. So we've got 4 in stage 2 currently: communication services, technology, industrials, and utilities. So we did see a few others move up into there, but they've dropped off again back into stage 1. So energy has been improving, got onto a SATA score of 7 this week, so +1. So still in stage 1, but we look on the, get that up, you can see stage 2 levels back through this significant bar up in this area. So we are seeing some strong improvement in the energy space, particularly with what's going on in oil. So